And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum warahmatullahi ta'ala wa barakatuh. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is the 2nd of June 2024. It's a beautiful Sunday morning. I just want to state out that we have started the third quarter of the year, so it's a good time to assess and reevaluate and go over your goals of what you want to achieve throughout this year. Let's get started now. For this today's weekly review is gonna be way more dense than the usual because I'm gonna be including gold, oil, and Bitcoin. It's just for the high time frame outlook. Anyway, let's get started. Starting with the XY, here we have the weekly time frame chart. I'm viewing the weekly time frame chart. As you can see, I've mentioned last week that we're pretty much in a consolidation area, so we didn't see much movement last week. And from here, price can just go up higher or go down lower. It has the same probability of going up higher or down lower. So I'm not holding any bias towards TXY. Going to the daily time frame chart, the daily time frame chart, the same thing can be said. It's pretty much in consolidation. It's not giving me clear direction or enough intel to me to determine which side our eye can bet on. So that's gonna be pretty much it for DXY. Going to ES, here I'm viewing the weekly time frame chart and I'm viewing the continuous contract. As you can see, last week I I mentioned that we will be dropping down towards this fair value gap as drawn liquidity, and we in fact traded to this fair value gap between this candle's high. This line should be narrated at this high and the low of last week. So we traded to the this fair value gap and we traded to the deeper fair value gap that I also mentioned about. Now from here, what I want to see is the constant encroachment to be respected on the daily time frame chart and to trade up higher towards the buy side liquidity. Going to the daily time frame chart, you can see that the constant encroachment is the rejection block. So here's where the influence between key levels. From here, I don't want to see price trading or closing below this level right there. This would be considered as a bullish order block. We have the volume balance. This could be considered as an inversion volume balance. If price trades back to it, it would be treated as support. The same thing can be said for the bullish order block. And this also could be a turtle soup because we have formed a low, traded down lower towards the favorite gap, and then we traded up higher. We start trading up higher. So what I want to see is a run towards the buy side liquidity. This means that price can on Monday or Tuesday, it can retrace, it can manipulate towards the inversion volume imbalance or to the bullish order block, to the mean threshold of the bullish order block. All of this is just manipulation. At that time, I'll be looking to accumulate longs and offset them, distribute them at the buy side liquidity. That's how I look at the marketplace. So that's gonna be pretty much it for ES. And also, by the way, before we proceed to the next market, just remember here we have a low and lower low. All right. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the weekly time frame chart and I'm viewing the continuous contract. As you can see, for NQ, the same thing can be said. We have fair value gap, price traded inside the fair value gap, which I mentioned last week. So I mentioned that my drawn liquidity is this fair value gap. From here, the same thing that can be mentioned for ES is also mentioned for NQ. We have the constant encroachment, which is the midpoint of this tail or this wick. I would want to see it being respected on the daily time frame chart and being treated as support that can send price. It's like a springboard or like a launch pad to send price up higher towards the buy side liquidity. Going to the daily time frame chart, as you can see, trade down lower. This is the constant encroachment. From here, price can trade up towards the fair value gap and up higher for the buy side liquidity. So that's gonna be pretty much it for. Also remember here, this low, lower low. That's gonna be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, just Dow has been running down lower ahead of NQ and ES. It's been weaker to the downside. We have created a fair value gap as a result of last week's trading. So I'm expecting price to retrace back and trade into the fair value gap between this candle's low and this candle's high. It's a bearish fair value gap, or it's also known as the SIBI, sell side imbalance, buy side inefficiency. So it's inefficient in the buy side liquidity. So later on we can see some buy side liquidity filling out this area between this candle's low and this candle's high before it wants to continue down, running down lower, or to run up higher. We don't try to discern or to try to anticipate what is the direction move in 1 year or 2 years. What we want as traders, as people who execute in the marketplace, what is the next candle movement that I can be betting on, that I can be trading? If that's the case, if I can know the next direction move, I can trade that because I have a direction, I have a narrative in mind that I can trade it. So going to the daily time frame chart, it's just been trading down lower, weekly fair value gap, the two lines, and we have the daily fair value gap. This is what I'm aiming at when price is like retracing towards the internal range liquidity. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm doing the weekly time frame chart. The same thing here as mentioned last week. This was my strong liquidity, and we in fact seen price retrace towards the fair value gap, which is my drawn liquidity, and then it closed nearly at the opening, which creates an indecisive candle. Now, if you look back, there's nothing that is inefficient. Everything here is efficient. So there's no fair value gaps to be for price to be filling them later in the future. So from here, we have also created relative equal highs that they're really something to be looking at. So next week, this is my drawn liquidity. I'm expecting price to draw towards the buy side liquidity. That is enough for me to get 1 to 2 trades next week into the direction of higher prices, which is buying, not selling. So I'll be longing next week in Euro USD until we hit the buy side liquidity right there. The the over animation in the markets would be running up for the rejection block here, and if it was really animated to the upside, we can see price running towards this buy side liquidity. So going to the daily time frame chart, you can see here is just a futuristic bullish breaker annotation. We can see a futuristic bullish breaker here after we close above this high. Now, for the bullish breaker or the bearish breaker, we don't need to see a close above them. The moment it trades above them, now you can start accumulating. So maybe at this point, you can start accumulating longs and aim for this buy side liquidity with a stop loss below this low or this low. I'm not gonna go into details, or I'm not gonna give you a financial advice, because you are the one who is supposed to get the signal to buy or sell. I'm not the signal provider. You are the signal provider. You are the trader that is the signal provider. I'm just a voice of reason. I'm just a guide, a guidance in the markets to try to discern to you what is the most probable direction in the markets. That is what I'm trying to do here on my channel. So we've created a low, took out this low, and fill this fair value gap and reach to the bullish order block. Please remember this low and lower low. Just remember it for the next market that we're gonna be covering, which is pound USD, or also known as the cable. So bullish features the bullish breaker. Price can from here run towards the buy side liquidity, as I've mentioned. Also, if it was animated down to the upside, the rejection block and the buy side liquidity. So that's gonna be pretty much it for Euro USD. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. The first thing that will have to come to your mind is that this low right there. We didn't form a lower low than this low. So here just turns on some question marks. This means that Pound USD, or the cable, is relatively stronger than Euro USD to the upside, because it refused to trade down lower and take out this low. whereas Euro USD it traded down lower and took out the low and filled the fair value gap. Pound USD didn't need or didn't it wasn't in need to trade down back towards the fair value gap and then from here trade up higher. It just it just refused to take out this low. Now, if I give you like um, an example, two men, one of them, let's say, has fallen down a few times, but he will just be standing up, dusting off himself, and he will just be walking back. But what if a man was hit so hard that he can barely walk? Obviously, for a man who has hit a little bit of times, he can walk and he can proceed in life, he can progress and he can make progress. But for the other man who was beaten hard, he cannot move, he cannot walk properly, he needs time to recover. So if you apply the same logic to the markets, Euro USD was bit hard to the downside to fill this fair value gap, whereas Pound USD, it has fallen a little bit. It hasn't fallen really hard. It wasn't beaten as hard as Euro USD to the fair value gap or to lower prices. It was just beaten hard a little bit enough to form relative equal lows with the candle that forms the fair value gap high. And from there, it started trading up higher and formed an indecisive candle, or also known as doji candle for the people who trade retail patterns or the retail candlesticks patterns. Regardless of what you trade, this is the logic that you must apply in the marketplace. This is the context behind what the market is trying to do, and you have to couple in DXY, Euro USD, and Pound USD if you're trading the Forex market. You have your main market that you're trading, let's say it's Euro USD, and you have an closely correlated market, which is Pound USD, and an inversely correlated market, which is DXY. You couple all of these out together, and you can get a very clear and very good viewpoint of what the market is trying to do. So I'm not trying to go into details about what is SMT because this is usually SMT, which is where like two markets closely or inversely correlated markets, one of them forms a low, and the other one refuses to form the low. This is for the closely correlated markets. For the inversely would be diametrically opposed. So I'm expecting price or especially on pound USD to be stronger to the upside, attacking this buy side liquidity, and this fair value gap to be left unfilled and be treated as breakaway gap. Going to the daily time frame chart, you can see low, higher low. On USD, we have lower low. So that's an SMT. Pound USD is stronger to the upside. Euro USD is weaker to the upside. We have fair value gap. This would be also, as I mentioned, considered as breakaway gap and just be left open without being filled. So from here, I'm expecting price to run towards this buy side liquidity and this buy side liquidity. So that's going to be pretty much it for Pound USD, or also known as the cable. Going to gold, here I'm viewing the weekly time frame chart. As you can see, we took out we formed the high and the fair value gap. We traded to the fair value gap, filled some of the fair value gap, and then we rolled it up higher to take out the buy side liquidity. From here, I'm expecting price to run down lower towards the sell side liquidity and potentially fill more of the fair value gap. And this will form bearish breaker, by the way. This will be considered as a futuristic bearish breaker to run down lower towards these lows and this fair value gap. This is what I'm expecting in gold. So that's gonna be pretty much it for gold. Going to crude oil, here I'm viewing the continuous contract and I'm viewing the monthly time frame chart. You can see we formed a high, traded back, filled some of the internal range liquidity, which is the fair value gap. Okay, this candle is low, this candle is high. From here, I'm expecting price to just run up higher towards the buy side liquidity here and the major buy side liquidity here. So that's gonna be pretty much it for crude oil. Going to Bitcoin, here I'm viewing the monthly time frame chart. As you can see, we've taken out the old all-time high right there, which is what was at 69,000, I believe. And then we formed a fair value gap after we took out the buy side liquidity. We consolidated a little bit here, and then we traded down lower, filled some of the fair value gap, and now I'm expecting price to just run up higher toward the major buy side liquidity and take them out. Now, just for your info, if you want to go more in depth in the crypto market, you can actually look at Ethereum because Ethereum hasn't taken out its all-time high yet. So if you are trying to, let's say, decide which market to be in for crypto, I'll be considering Ethereum because it has more potential to the upside when compared to Bitcoin USD. So that's gonna be pretty much it for this week review. I really hope you found this one insightful. Until I talk to you next time, be safe. And also, if you have any questions or any information you want to go over on, please don't hesitate to contact me. I have my Discord in the description below, and I have my Twitter account, which you can reach up to me through these. So that's gonna be too much it for this week review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.